Hello traders, welcome back to the channel. This is Vishal and you're watching the weekly sectoral analysis. After such a vertical pullback, we saw almost 3 to 4 days of consolidation, which was expected, and suddenly we saw a large red candle over here, which probably frightened a lot of the bullish traders which had recently got confidence in this market. Now the million-dollar question is, after this initial breakout, why I'm saying a breakout is Nifty has been able to close above these two recent highs. So after this breakout, will this particular pullback, will this particular uptrend sustain, or will it fizzle out on the downside? That is what we will be discussing today, not just about Nifty, but all the other important sectoral indices as well. Okay. So first, having a look at the monthly time frame charts, which is on the utmost right hand side over here. The trend is up as the price is trading above the dual moving averages. The price has also been able to bounce back on the back of this very strong uptrend line, which has been holding since June 2022. This is a very good sign. Going ahead, looking at the weekly time frame chart, you can see that after the initial pullback, the last week was great, but on Friday we saw a bit of profit booking, which was pretty fast and volatile in nature, and due to which the candle which has been made is a small inverted hammer. Now, should we give a lot of importance to this particular candle? Well, what we need to understand is, if a particular candle is made, exactly where it is made, kahan wo candle bana hai, that is the most important thing. Just a random candle will not make sense to us. So to understand this in depth, we'll need to go further into the shorter term time frame chart, which is the daily time frame. Now in the daily time frame chart, if you can check properly of this uptrend, we had a particular resistance, which I had also shared on my Twitter handle, was this particular Fibonacci extension. This Fibonacci extension is at 24,388, or you can say in round figure 24,400. So exactly from there, you can see Nifty spot gained some sort of selling, and then market started coming down. If you want to have a look at this selling a little bit more, you can see even over here in the daily time frame charts, you can see a negative divergence in the RSI, and you can see a bit of selling. Now, if I combine the analysis of daily and the weekly time frame chart, now you will probably understand why this particular inverted hammer is important. It is important because it was facing resistance at this level, which is 24,400. Now going ahead, should we say that is this a top or this is a very strong resistance, and probably we will have difficulty to go ahead or not? Well, to talk about it more, what we need to understand is this particular pullback which happened was a very large pullback. Only the matter of fact is that this pullback did occur way too fast. This pullback is of close to 12%, and 12% pullback in Nifty just occurred within a matter of 11 bars, 11 trading sessions, which is just half a month. So generally after such a pullback, some sort of profit booking or consolidation was required. You can also see that the daily RSI was close to 70, not exactly at 70 or above 70, but it was close to 70, and that is the reason we saw this particular profit booking happen. If we see a little bit more consolidation going ahead few more days in the next week, I think it will be good for the market. Okay, so why it will be good for the market? Because see, no uptrend, whether it is a stock or a index, none of it can go up every day. Every day is not a Sunday. We will see up days, we'll see big up days, and we'll also see small candles and consolidations. Small candles and consolidations are always better in an uptrend rather than a sharp throwback on the downside. So if we consolidate in the next week, it is a good sign. But yes, in doing so, we should not break any important support levels. And talking of support, this band, which I'm sharing with you right now, 23,736 to 23,850 or 852, This is a short-term support. I repeat, it is a short-term support for Nifty in this particular zone. Now going ahead with Bank Nifty, first we'll have a look at the monthly time frame chart. The monthly time frame chart is super duper bullish. You can see over here the price is in an uptrend, RSI is looking fine. Now in the weekly time frame charts, yes, you will be a little bit unsettled by the matter of fact that we do have a very big inverted hammer on the weekly time frame chart of Bank Nifty spot. But we should also understand that the pullback has been super fast and it has been vertical. See this rally, the angle of the rally is pretty comfortable. It's like slow and steady. This is not a rally. This is like a rocket shooting up in the sky. And generally after such a rally, if a stock or an index goes up way too fast, it will also tend to come down very fast. We need to understand that. Okay. So this is pretty normal. It is fine. Yes, it's not a good candle for sure. As a bull, no one will like it, but it is normal. Now, in terms of trend, yes, there is no doubt we are in a very strong uptrend in Bank Nifty. RSI was well above 70. It was at 77. This was the Fibonacci extension, somewhere over here, 56,420. And we did top out actually just at 56.1. And at times in Bank Nifty, 2 to 300 points in Bank Nifty. At times, not always, does not matter. So I would say, and I would give a benefit of doubt that yes, Bank Nifty did sense that there was some sort of resistance here. It did go for a profit booking, and even the same thing I had shared in my Twitter handle that we do need to consolidate in Bank Nifty, and we did by a margin of 3.31% in 3 trading sessions. Now this is a decent support for the short-term traders in Bank Nifty from 53,953 to 54,477. In terms of trend, we need to understand that since Bank Nifty has gone up way too fast on the upside, it needs to consolidate before we see some up leg on the upside. If we break this particular support, yes, we do have supports on the downside. I'll update it whenever it is necessary and if at all it is necessary. And in terms of Dow theory, we had this first low, then we had the second low, which was higher than the first one. We had this high, which is higher than this one. Now we have this high, which is higher than the previous high. So now we need consolidation, and that consolidation low should be above this low. As far as that is taken care of, I think we are out of danger. Yes, short-term volatility, short-term consolidation cannot be ignored. It will be there. So I guess next week is not a very good time to take aggressive trades. Wait on the sidelines, give market time to breathe, give it time to relax a bit. And once I think things are in place and all over the world, if the news are also fine, we may see a next leg of an uptrend. But yes, again, we should understand that as traders, we should be reactive. We might have a view that we are in an uptrend. If we have a higher low, then we'll continue to go higher. Fine, that is a view. But if the view changes with the charts, we should also change with the chart, and we should be reactive traders. We should not be stubborn, predictive traders. All right. Private banking pack. Private banking pack is, I think, very much similar to the Bank Nifty chart. I will not go into much depth over here. I would just say one thing. It is in a strong uptrend, and it certainly needs consolidation, probably a little bit on the sideways. And if we break some important support, we could also see short-term profit booking, but overall things are okay. Things are fine. PSU Banks. PSU Banks, if you compare with private banking chart, you will obviously see that the strength in the PSU banking chart has just started picking up, although it is not very strong, just like the private banking charts. So some sort of caution we should be adhering over here in the PSU banking chart. We should see that we don't break some important supports, and in the next few days we'll have to be a little bit careful before we place any trades in this particular sector. Energy pack. Energy pack, I think things are okay. We do agree that we do have a negative candle over here in the weekly time frame chart, but the daily time frame chart is looking fine. When both the time frames, when the daily and the weekly time frame chart both look negative, then we should say that things are a little bit hunky-dory and we should be a little bit worried. As of now, the daily chart is fine. Weekly chart does show a candle which is a little bit unsettling, but I think we should give a little bit of benefit of doubt to the sector, wait for next week and let the price unfold itself. If we consolidate and if we move higher, then I think there is no problem. But if we break any important support, then maybe it's time to change the view once again. Autopack. Autopack in the monthly time frame chart, the pullback is looking fine. It's okay. In the weekly time frame chart, it's also average. It's not great. In the daily time frame chart, again, I would not say that, okay, we have now a big breakout or something like that, because we still have a lower low in place, but we also have a higher high in place. So one thing is good, one thing is bad. When we have both things which are good, like if we make consolidate, if we make a low which is higher than the previous one, and if we start moving higher, then maybe things can change. But otherwise, as of now, I think the auto pack is slightly in a zone where we should be doubting on this particular pullback and wait very, very patiently and keep our eyes open for the next week, how the price moves. Consumption pack looking great in the monthly time frame chart. In the weekly time frame chart, apart from the last week's candle, things are looking fine. Yes, the pullback has been slightly, I should say, I'll just remove these things, has been slightly volatile in nature. It has been strong and volatile. So I should say that the consumption pack has faced resistance from its previous high. You can see this. It's fine. It's okay. We do have a support zone over here between 38.2% and 50% retracement, because we have this gap and we have this candle cluster as well. So if we retrace more, we consolidate here and again start moving up, things will be fine for this particular consumption pack. If we break an important support, maybe yes, then things can change. Finance pack again looks very, very similar to private banking pack, looks very, very similar to a bank nifty chart. Again, I will not like to comment much in finance pack. I would just say one thing. Finance pack is a little bit more stronger than the private banking chart, considering the candle over here is not extremely bearish like the private banking charts. You can see over here we have a very big wick on the upside. So I think in the finance pack, we'll need a little bit more consolidation for these gains to, take it more constructively. Let the market take a breather, and maybe once that consolidation is complete, we can resume the main trend which is on the upside. FMCG pack. FMCG pack in the monthly time frame chart, it's trying hard to try to create a bottom. In the weekly time frame chart, the pullback has been strong, especially this particular week of of the starting April. Last 2 weeks, we have more or less consolidated, and I think we can still see very, very clearly that we have not been able to surpass this high. This zone over here tells a lot of things, because this is consolidation. I'll say this is consolidation. This is a rally, a low momentum rally coexisting with a consolidation. Things are okay, nothing bad, but I think if we consolidate, we should be sure that we do not break any important level on the downside, any important support. A post consolidation, if we start moving higher, create a higher high than this one, then things will be interesting for the bulls. Infra pack is a little bit more stronger in comparison to other sectors. Yes, I'm not comparing it with the finance pack or the, you can say, other sectors like private banking pack or PSU banking pack, but I should say that it is more stronger than different sectors like auto or consumption or finance or FMCG. It's a little bit more stronger, because the reason and the matter of fact is we do have a higher low over here, and we do also have a higher high over here. Now, if you want to have a little bit more in-depth view, let's have a look at the weekly time frame chart. In the weekly time frame chart also, surprisingly, we do have a higher low in place. And this candle, yes, it looks like a spinning top and a high wave candle. It is a mix of the both. If it was a perfect high wave candle, it would have a much bigger wick on the upper and the lower sides. So I should say so far things are okay for this particular sector. As far as we consolidate the next week and continue to move on the upside, things will be fine for the infra pack. IT. Okay, now things will be different. Now looking in the monthly time frame chart, we can clearly see that this month is coming to an end and we do have a big hammer over here. Yes, we do have probably a couple of days more to go in this month, but so far so good in the monthly time frame chart. In the weekly time frame chart also, we have seen a much strong pullback. Now this sector is very different from other sectors. We are still in a downtrend. We still have lower lows, lower highs. So if we consolidate here, more and start turning down on the downside, then things will look a little bit more worrisome for this sector. First thing what the IT pack needs to do is at least little bit bullishness it needs to show, and it needs to surpass this level. At least by this we'll make a higher high for time being. Then obviously there are a lot more things, because when a sector makes such a big correction, then bottoming out and reversing on the upside is not easy. So there are a few things which the IT sector needs to do. First thing is, after consolidation, if it starts correcting, I think it will be a sign of a weak sector. But if it starts trading above 38,000 levels or 38,100 or 3850, it will be a probably a little bit more bullish than what it has been so far. Metal pack, I think it's a mixed bag. There are few of the stocks which were looking bullish, few of the stocks which were looking bearish in the metal pack. I would not like to take the names of the stock, but I would just say that when someone is trying to trade in the metal pack, be sure that you are taking the stock, or you're taking the trade in that stock by the merit of the stock. I would say that this is not a right time to have a completely blanket view for this particular sector as of now. All right, so we'll wait for this. Pharma pack, again, I should say the way it is moving in monthly time frame chart, things are okay. Yes, we have moved up, but it seems we need a little bit more consolidation. In the weekly time frame chart, things are okay. Yes, we have moved up. It's a good sign. But in the daily time frame chart, I think the chart is still, I should say, not as per what we should need for a bullish up move, because we do have still a lower low and we do not have a higher high. Yes, we do have a couple of wicks which are above the recent high, but I don't think so that is enough. So as far as we are consolidating, we just move sideways and then start slowly and steadily. If we start moving on the upside, it will be better. But if we consolidate and if we start going on the downside, then things will be different. PSE sector, I think we should say that the way the sector corrected was very bad. It was very sharp, but recently it has given a very strong pullback. There has also been a positive divergence in the weekly time frame chart, which means the base is strong. And now we do have a low which is above the previous low, a good sign. And we also have a higher high, which is also a good sign. So as far as we consolidate and move higher, things are fine. But if we start moving down, break important supports, we do not respect this low, then things will be a little bit more problematic. Real estate consolidating, initial pullback was there. Again, we do have a inverted hammer. Monthly time frame chart is slightly better. And again, over here, if you can see properly, we are still sort of, not exactly, but sort of at the same level. Yes, we have made a higher high, but the overall quality of the trend is not up to the mark as it has been in few of the sectors which have been able to make a higher high, higher low pattern. Yes, we have made, as I said, just recently 2 minutes back, but the quality of the trend is not up to the mark. Also, we do have a higher high in place, but also a lower low in place. So I think this is more of a widening formation, and widening formation is not very conducive for bottoming out. So let's wait for a few days or maybe a week or so. We'll have more price action in place to, let us know that how this sector will be moving on the upside or on the downside. Midcaps, I think they have done well for themselves initially by looking at the daily time frame chart. Only thing worrying over here is that midcaps are slightly more volatile than large caps. The inverted hammer over here is of slightly bigger size, and the red candle over here in the daily time frame chart is also of the slightly larger size. So that is a worrying sign, but overall things are okay. We have been able to make a higher high. As far as we make a lower, as far as we make a higher low, and then after the consolidation, if we move higher, it is fine. But if we start moving down fast, very fast, things will be different than what we are expecting. Now, summing it up all, I should say that so far, so good. The 12% rally in Nifty has been impressive, maybe way too good. But again, I would repeat that the rally has been led by the private banking pack, by the finance pack, okay, and a little bit by the FMCG pack. Okay, these three sectors are responsible. Yes, there are other sectors, but preliminary these three sectors. Now, if we want to see the overall markets to go higher, achieve a little bit more from what we have right now in place, then I think other sectors will need to participate as well. So maybe next 1 to 2 weeks are going to be very, very important. Have patience. Do not jump in unnecessarily in any stock. Wait patiently, let the good trades come to you, and only then start putting your trades in your trading portfolio. And especially the next 1 week is going to be very, very crucial. All right. So I hope this video has been helpful to you to understand how Nifty and other sectoral indices can move. Trade less, trade wisely. Thank you.